Welcome to Energy Insights. In today's episode, we're speaking with Gerry Arances. Gerry is the founder and executive director at the Center for Energy, Ecology and Development in the Philippines, also known as CEED. Today, we mainly focus on the skyrocketing prices of gas and liquefied natural gas, or LNG, and how that's affecting Asia and specifically the Philippines. We also look into how much investment has been made into gas infrastructure prior to the price hikes, if investing into gas to transition to cleaner sources of energy was a good idea in the first place, if high prices are temporary or here to stay, how Europe's new appetite for LNG is affecting Asian gas supplies and raising costs, the impact of high gas prices on everyday people, and alternative ways forward, such as looking into distributed renewable energy in the context of the Philippines and other Asian countries. It was great to talk to Gerry about these very timely but far-reaching issues. I hope you enjoy it. Okay, so we're here with Gerry Arances. Gerry, thanks so much for coming on Energy Insights.
Thanks, Ashley, for inviting me as well. This is really a good opportunity to be conversing on a very hot topic.
How was the rest of COP for you? We met at COP27. How was it? Was it a busy few days for you, or have you recovered yet?
Yeah, COP is always busy, but I think this COP is a bit very challenging from previous ones. But yeah, we've recovered a bit after leaving COP.
That's good to hear. So, Gerry, before we start, I think it might be a good place to just briefly introduce yourself to listeners about where you're working, what your background has been, and what you're currently working on now.
I'm the founder and executive director of Center for Energy, Ecology and Development. It's fairly quite a young organization here in the Philippines, which does work on policy but also engages communities and networks for policy changes, not just on energy, but we work a lot on energy, but other related topics, especially on the issue of environment, sustainability, climate, but also development, larger development issues. But in the last couple of years, we've really focused on energy, the energy transition in the country. But before CEED, I've been in the energy space and climate space for the last 15 years on several organizations pursuing, in general, energy transition. So I've been involved in the first expansion of coal in the Philippines, the country, when it was just starting. So it took us several years to get the coal moratorium in place. And previous to that, I used to work with indigenous peoples on natural resource and minerals management, as well as did some stint with the labor sector.
So you've been all over the place.
Kinda. But in the last couple of years, I've been really focusing on climate, energy, and environment.
Awesome. Good to hear. So I think a good place to start for us today would be, I guess, how has the gas industry in particular, now we're talking about gas today, just for our listeners' sake, how has the gas industry portrayed itself over the years, particularly in Asia? What's the history behind it becoming known as this, now what it's known as a transition fuel, or how it's portrayed as a transition fuel? What got Asia hooked in the first place? I mean, you mentioned coal earlier, how did we jump from coal to gas? And maybe, I mean, you're from the Philippines, so maybe you could talk in the context of the Philippines, and maybe that's a general reflection of Asia as well. How did we get here?
I think it was probably in the last decade or 15 years or so, when it was more of coal as the villain. So portrayed as really, very dirty, a lot of imprint in terms of emissions, carbon emissions, but also with, related to destruction, especially coal mining, in several places, including the Philippines, several islands in the Philippines. So it's quite graphic. During those time, gas has been portrayed really as, the lesser evil, lesser in terms of emissions compared to coal. I remember in the early days of the work on coal, in most of our interventions on policy work, but also in public education, is that you compare gas versus coal, and most of the literature then portrays gas as lesser emissions. So it is in terms of, if you want to transition or if you want to pick your poison, I'd rather pick the lesser emission. If the infrastructure for renewable energy investments policies are not yet in place, so such was the case in the Philippines, and also in a larger part of Southeast Asia, actually majority of Southeast Asia, right? But at the same time, there are economies in Asia, in particular in Southeast Asia, that have been far advanced in terms of developing their gas industry. So, and tied up to exporting gas. So, I'm pertaining to the likes of Malaysia, where Petronas plays a very strategic role in terms of not just for gas, but as well as oil, right? Because it goes hand in hand in terms of, especially on extraction. And then you have the likes of the Philippines developing its first gas well, which was around roughly 15 to 20 years ago, which is Malampaya. And then if you look at the most advanced in terms of gas infrastructures, and corporations having built their capabilities, technical as well as business-wise, and banks, and I'm pertaining to Thailand, which is basically, have been dependent on gas for the last decade, with around 60%, right? So really majority of their power supply has been sourced from gas. But overall, it was, it's mainly that gas is portrayed by many, even the scientific community, as a lesser evil in terms of dealing with climate, right? In terms of economics, it's also the same. Like stranded assets is not associated with gas probably in the last 5 years or so, when stranded assets in the energy sector vis-a-vis climate and other factors have been introduced and mainstream. It's really not associated with gas, right? So even in terms of economics, most literature would say that this is a preferred fuel source. I can still remember in 2019, I think 2019 or 2018, when there was the first sort of roadshow in the Philippines to introduce LNG. And the presentation in one Senate inquiry on it, because of the dwindling supply of the main source of natural gas in the Philippines, which is Malampaya, which is will be is projected to stop supplying by around 2027. And LNG then was around I think it was projected as 2 pesos and 55 cents per kilowatt hour. So compared to coal, which was around more or less an average of 4 to 5 pesos per kilowatt hour. So even in terms of costing, in terms of electricity prices, it's presented as such. But there are key players already that have been there, even for Asia. So in most cases, domestically, most of the economies, even in the likes of Bangladesh, right, it has developed its own industry. So in most cases, it's a bit acceptable. So even in the visual aspect, like you don't see the black smoke pollution coming out of gas-fired power plants, right? So it's really caricatured as a lesser evil, quote unquote, in terms of fossil fuel sources.
And I guess if we pivot to today, now we saw this huge drop in demand in just energy in general during COVID because of, everyone lived through that period, so I don't really have to rehash it again. But then we also saw a huge uptick in demand once restrictions were lowered. And then, of course, subsequently we had the Russian invasion of Ukraine, which kind of tipped everything upside down, and then energy prices went pretty crazy. And I mean, I know just in Asia in general, in this October recently, gas prices were around up by 300% or something really, really ridiculous, right? So what are your thoughts on the context the globe finds itself in, and how is this affecting Asia right now in terms of just high energy prices and in particular high gas prices?
I think, yeah, in particular because of the impacts of the supply crisis, supply issues now, and the uptick in terms of the pipeline in Asia. So it sort of creates, it has its implication as well in terms of the energy crisis that caused high prices of LNG sources, right? And you have to compete with how Europe deals with it in terms of the prices in terms of the global market. But at the same time, because of the demand and the pipeline in Asia, it also has, it also drives that further. And it's so acute right now that even in the context of the Philippines, and that is why there has been big fights in terms of rates issue in the Philippines vis-a-vis gas, and in particular the San Miguel petition, which has gone to the courts, which is a heated national debate now, wherein you would find the president intervening on a court decision, an initial court decision. So it has gone to that extent because everyone knows already the implication of and knows what the situation in terms of the market is. It's like, this is really driving the issue on affordability and as well as accessibility in a region where energy poverty and accessibility in the first place is a major issue. So it also surfaces the limitation of being dependent on fossil fuel, a finite resource, vis-a-vis the vulnerabilities of the economies in Asia. And a lot of conversations in most countries, in circles or in policymakers, is around dependency on imports. And the other side of that is, there's a lot of impetus also to actually pursue domestic extraction. So these are two sides of the coin, right? So that is now the policy of the government, to limit its dependency on foreign imports, but to push for more extraction and develop the local industry, in particular in terms of gas and other sources like coal, even coal. So there's that implication as well. And in most cases, countries that are dependent on importation would look at exportation as a way of, as well as not just cautioning the issue on high prices and tariff and of course importation, the prices of supply. But at the same time, if you look at Malaysia, which is an exporting country, a gas exporting country, there are data there that says, it provides that, there's implication in terms of subsidies. So the subsidy is also growing. So it's not just about, earning from revenues. So it's not an easy roadmap or picture, even for the likes of Malaysia. Most or some of advocates or policy groups are now looking at it in terms of the implication of what is happening generally in Asia.
Now, if we look at investment in general, in terms of gas, how much investment has been made in Southeast Asia or Asia in general on gas related energy systems, and I think you mentioned earlier about the implications of being reliant on an imported source of fuel. Is that such a good idea in retrospect, considering that prices have gone through the roof lately? I mean, has this been the right course of action, in your opinion, for countries in terms of a policy decision?
I think that's one of the major conversation nowadays in corporations that are tied up, but also with policymakers. In our data, because the overall the trajectory of Asia is that it occupies around 60% of the global LNG buildup. So LNG issue is really a big one for Asia. And if you zoom in on Southeast Asia, the overall pipeline, it's around 102 billion US dollars. And it's growing. It's not like it was lesser, around 20 billion US dollars months after we released our report. So it was really growing fast in terms of the overall pipeline. But Southeast Asia is far bigger then and until quite recently when we updated our data on this compared to East Asia, which was around just 84 billion US dollars at that time. So Southeast Asia is the biggest in terms of the pipeline. And I think the issue now on supply and how the supply problem is driving, of course, the prices of supply, but also driving the tariffs in importing or import-dependent countries such as the Philippines and many others in Southeast Asia. Like most of the investments have not foreseen this. So the debate around here, this is in the Philippines, is that, and in particular in that petition, like legal petition, from one of the big corporations in the Philippines, is that they be allowed to raise their tariff because of the unforeseen situation globally. So in terms of stranding, they can really actually in several cases they can just pass it to electric consumers, right? If you have a tariff structure that you can actually pass through the cost of fossil fuel volatility or increases, right? So
and this is you mentioned the petition in the courts. Is this to do with the tariffs getting passed on
Yes.
to everyday people?
yes, that they need to increase and that that has to be passed through. So it's a big debate because at the end of the day, with what's happening not just in the Philippines but across Asia in terms of inflation, in terms of the impacts overall of the global food crisis nowadays, the debt problems, especially in South Asia, it creates a lot of complications. And at the end of the day, you have a social volcano, right? And this adds up to that. But in terms of is this a good business decision to invest on? I think what's happening has surfaced the fact that dependency on fossil fuel has this problem. While it is very acute nowadays because of the implication of the Russia-Ukraine war, we've seen that gas has been consistently in the last 5 years been increasing, right? It's not like it has been stagnating or it has been dipping. That is not the case. And during one of the side events in COP, I alluded to in my presentation that we know for a fact where this will lead us. If indeed the findings of many experts that the prices of LNG globally will taper down at around 2026, right? So this is just a moment, but definitely if you look at what happened in coal, right? In the early stage, it was all rosy pictures, right? The issue on stranded asset wasn't really a thing yet. But eventually it caught up. Not just because of policies against coal, vis-a-vis climate, but also because renewable energy is becoming more deployable, more cheaper, and at the same time, at the other end, fossil fuel is finite sources, right? It's basic on economics, the law of supply and demand. So eventually, gas will become a stranded asset. Like for example, the AIB just released its energy update, and it's all gas, right? People might praise the AIB for finally putting in words that they will not be funding coal. But I think it's more of the issue on the AIB energy update is energy strategy update is about gas and its location, and the fact that it was so silent on the energy crisis and the supply problems is very telling, right? And it's, I think it's the supply issue and its implication on tariffs and high prices of electricity clearly illustrates, the problem with being dependent on this. Even though if they will be able to resolve it eventually around 2026 with more supply, which is actually in violation of the IEA findings. It's all problematic proposition. So it's not a win-win solution. And in some cases, like in particular in the Philippines, I think the likes of San Miguel, who has invested a lot on new gas facility, has made a bad business decision. They just don't want to, you don't want to accept it, but the stocks, their plummeting stocks speaks for itself. And I don't know if they have a way out of it. Like they don't even have a supply to get a 1.2 gigawatt existing gas plant that they acquired fully in June 2022 to run it and eventually be able to supply. What is happening is basically creating these problems, and it should be a wake up call for the business sector that this is not a sustainable bet for or a good business decision from their end. For policymakers, I think they really have to address that, and there's a lot of necessary policy changes in terms of safeguarding energy supply, energy security, and much more on the implication to tariff and electric consumers' rights.
That you mentioned San Miguel. They in June, I think you mentioned that they acquired this plant. Was that an LNG facility that they've invested in?
That's an old gas plant which was owned originally by KEPCO, but they are
KEPCO being the Korean.
Yes, the Korean electric company, which is now divesting from their coal plants. They've realized that it has liquidity issues as well. But San Miguel is also building another close to 1.8 gigawatts, which is in the pipeline, which everyone in the industry knows that it will have a supply problem because even their existing plant is not running. So I think that's the issue right now, that most of the new LNG or gas plants that have been built are either not running fully or not running at all because of supply issues. I think those that have been exposed will have a really big problem because in one of the forum here organized recently, where the former head of the Committee on Energy in the Senate clearly illustrated the problem on supply, that it's so hard to get a supply contract, and that is a big problem. And so for companies that have already bet on it and are exposed, this is a really big problem for them. But for others that are still planning or are not yet fully exposed, this is a really good wake up call for them.
If we plant a flag with supply, I just want to touch on supply for a second now. This in particular has to do with Europe's new appetite for, in particular, LNG post-Russian invasion of Ukraine, since Russia's now using piped gas as kind of like a geopolitical weapon after sanctions were placed on it after it invaded Ukraine. Now, how much of Europe's new appetite for LNG has affected, say, supplies for the Philippines, for example?
I think there are numbers already, researches from the biggest Asian importers, which is basically the East Asian economies. So that's China, South Korea, and Japan. I think, if I'm not mistaken, around 30% reduction of supply, if I'm not mistaken. It's almost every quarter it's changing, and because of what's happening, it's really a big problem. But definitely, even the existing supply for the existing economies in Asia is having problems in terms of sourcing LNG, right? US, which is the main source of the likes of Japan and South Korea, is diverting its supply mainly towards Europe, especially this year. And for Middle East, it's mainly, the Philippines has always gotten its supply for alternative fuels. If we have problems with malampaya in the last couple of years, mainly coming from Qatar. But if you talk to the industry, they're really not bullish in terms of supply. The biggest company that is involved now in the gas industry in the Philippines is the Lopez Group, the first gen, which has an existing fleet which supplies around more or less 50% to 60% of the overall electricity in Luzon, the biggest island in the Philippines. They're now renegotiating their supply contract. And what we've heard was that they're having problems in terms of, definitely they're not going into long contracts. Mainly very short contracts, like 2 years. So they would be having problems in terms of the implication of the tariffs, right? Because at the end of the day, their contract could actually be scrutinized. So the issue on supply is really affecting, in particular, the Philippines, and notwithstanding, the other countries, like Bangladesh, the lines, rotating brownouts, tariffs increases. It's so acute there. The Philippines is just moving into that period, and it's just relatively fortunate because we're not too dependent on it. The other side of the problem is that we're too dependent on coal. The issue on mix and dependency is really being highlighted in an acute way. But definitely in terms of supply, it is a major issue right now.
Now, in terms of high gas prices, considering that supply is really constrained right now, how do you see the situation playing out in terms of, I mean, as we've talked about, that some companies in the Philippines, for example, and in fact in other Southeast Asian countries and countries like, as you just mentioned, Bangladesh, they've made big bets on, say, infrastructure. I mean, you've mentioned that San Miguel has, I think you said $1.2 billion in the pipeline?
1.8 gigawatts.
1.8 gigawatts, sorry, in the pipeline. Can you see these infrastructure projects going underutilized if high prices stay, or will they be abandoned, or do you think that they might just bite the bullet and end up paying high prices for supplies?
For one, in particular for the Philippines, like for example, San Miguel, I was just pertaining to one of its project that it's in the pipeline. Basically, the most advanced project in terms of development, because there's construction already. So that's the 1.8 gigawatt. But the overall pipeline plan of San Miguel is actually around 15 gigawatts in total.
And that's
So
just in gas projects.
that's just in gas. And that's why in our recent report and updated report that San Miguel is the biggest in terms of company that has a pipeline with around 15 gigawatt in Southeast Asia. So it eclipses the other its counterparts, Gulf, PTT, the big companies in that are involved in gas in Thailand or even in Vietnam. But what is happening because of the issue on supply, notwithstanding, of course, the resistance of communities and stakeholders, raising the issue even of costs and the tariff implication, has actually they basically not really shelved but withdrawn their application for environmental, one of the key permits, which is the environmental permit. They've withdrawn their petition to the regulatory body recently this year with 3 projects. So they've withdrawn 3 projects. The other projects has not moved. For the case of the Philippines, it is like a reflection of what's happening in Southeast Asia or even across the board. I think there will be a new report that's coming out by the the Global Energy Monitor on looking at after a year and having the supply problem brought about by the Ukraine Russia war, what is actually happening with the gas plants or with the gas pipeline. And I would presume that most of the projects that were announced have been withdrawn or have not moved or have been delayed. Like this plant of San Miguel, which is 1.8 gigawatts, was supposed to be in operation in August, based on its actual plan. So it's now delayed. I think that's the feature right now in most of the new LNG facilities in Asia.
Some analysts suggest that this is kind of just a temporary blip in terms of high costs and supply issues. Now, they're suggesting that once new supply comes online, and that may be in 5 years or 6 years, that Asia will soon become once again, as we pertain to earlier in the conversation, this kind of area that's in high demand, that's demanding a lot of gas. Does this make sense from an economic and energy standpoint? Do you think that there is an argument there to suggest that this is just a temporary blip, or do you see that the situation right now is kind of leading to this entire demand destruction that's going on in gas right now in regards to high prices and supply?
For one, there are some analysts that are saying that it won't go back to where it was pre-war, pre-Ukraine-Russia war, right? And also because there are indications that it has been increasing prior to the Ukraine war. And there are many policy implications to that, which we have seen like in 2021. Like when the EIB came up with its policy, its roadmap to financing gas, right? Which will close down it has its roadmap. It sends a market signal to the industry for Europe in particular. When the Asian Development Bank came up with a lot of restrictions in terms of its gas financing, it sends that market signal. So even before the war, we're actually moving towards that, a restrictive world where public finance as a leverage becomes far more restricted, right? And private finance needs public finance to address, the risks as well as policies in respective countries to actually support the entry of private finance into gas. So we were actually in that context already before the Ukraine Russia war, and so therefore the indication is not it will be as rosy as before, and in particular because of what happened, and this is where I think the work engaging policy makers and highlighting the problem of dependency on fossil fuel, on in particular even on gas as a transition fuel, has to be surfaced and has to be debated on, and including in the business sector. Like for the likes of San Miguel, do you think San Miguel, after what happened just this year and moving into the next couple of years where you have a tight supply of gas, will not have implication in terms of how they make business decision? Right? It will definitely have that implication. That betting on gas is not a long-term investment or strategy or business strategy. I think that's the if there's any positive side out of this crisis, it's that it jolts those that have betted on gas and have even promoted that gas is a transition fuel. In particular, you would, at the early part of this year or last year, because it was the election period, you would have other personalities talking about gas is a transition fuel. We have to deal with gas. We need gas to to stabilize the intermittency of variable renewable energy, solar and wind, blah blah blah. But we prioritize renewable energy, and then you compare it to what they say right now. So there's really that change, and I think even for in particular for business, it would really have a significant impact on the mindset. But for exporters, of course, they will definitely create, because they earn from it. They and so that's why it is important to also highlight that in Asia you have the fourth biggest exporter, which is Malaysia. And then you have Indonesia building export terminals. And one of the biggest project by Shell is actually in Indonesia for an export terminal connected to the upstream gas project. So these are blind spots for the industry to look into, because definitely they will be promoting that. But overall, I think there is that sense and advocates, policymakers, or those that are engaging policymakers needs to surface this conversation.
And if we zoom in a bit onto everyday people, how does this affect their lives, their businesses, the economics of the country, the politics? I mean, we've already seen a upheaval in Sri Lanka due to high debts, high costs of fuel that basically contributed to this ongoing energy crisis in the country. What do all these high prices and supply constraints mean for everyday people? And I mean, you can speak in a Filipino context, or if we'd like to, we can also expand into other regions of Asia.
When we were campaigning or advocating for energy transition, it was so abstract back then. But once you connect it with tariffs, with high prices of electricity, then it becomes a gut issue. And because it's it's real for those that earn for not even $1 a day, or even to some extent like $4 or $5 a day, that becomes a major issue. Like any increase. So at the end of the month, because of what San Miguel did in terms of its supply, because it pulled out, it got a temporary restraining order from one of the higher courts, which is now being pursued to be lifted by the government. The implication is that around $4 will be added to monthly bill of an ordinary family. So in a context wherein high inflation is prevalent in the context of the Philippines, prices of basic commodities is just really skyrocketing. And one of the staple ingredient that we use for food preparation which is it's called in the Philippines sibuyas. I don't know the translation. I forgot the translation. It's not garlic, but it's one of the staple ingredient in food preparation, which is now very hilarious in terms of prices. Like 500% increase per kilo. And one of the debate is that are you able to live without it or not? Right? So it has become that ridiculous. And many Filipinos, if you look at the social media and the reaction of ordinary Filipinos, of course, we cannot live with that. We've been living with that ingredient for, since I was born. So it's that ridiculous, and the implication of additional tariff increase will really have additional heavy burden to Filipinos. For other countries that derives revenue from from gas, like the likes of Malaysia, there's a lot of conversation in terms of the increase of subsidy because it has implication. So it has implication in terms of the coffers. And eventually it has implication in terms of the basic services that you are able to provide with. So it has layers of implication. But for countries such as the Philippines, it's far more acute. Because it is a gut issue. I think because of historically of these issues, especially on high prices, not just of electricity but the basic goods, has always been an explosive issue for Filipinos. So what happened in Sri Lanka or even in Bangladesh to some extent will actually really happen to the likes of the Philippines as well.
Now, if you taking all of this into account from supply, cost of living, high costs of gas, for example, over reliance on imports. Now, if you were to offer any sort of advice for a way forward for Asian countries to, I guess, in a sense, shield themselves from similar shocks like what everybody is going through right now, in particular for energy, what would you suggest, and what do you think an appropriate way forward would be?
So of course the easy answer is renewable energy, right? It's easy but it's hard, especially in countries of the likes of the Philippines, wherein 60% of our electricity is derived from coal and close to 25% is from gas. And I think in most cases in Southeast Asia, that's also the situation. We're mainly dependent on fossil fuel. But concretely for the Philippines, I will just refer to what one of the regulatory bodies is now promoting as a starting point in terms of concrete relief. So there are many policies that will caution or limit the impacts of high fuels cost. There are many, but one of that is to actually source your electricity from renewables. So the first aggressive push right now from the Energy Regulatory Commission is to engage all electric cooperatives, because that is the majority of the distribution in the Philippines are based on electric cooperatives. Engage all electric cooperatives in the provinces to implement and encourage business households on net metering. So they've been really going around the country because they have this formula. Back then, in more or less around 7 years ago, the most famous computation from the Department of Energy for them to encourage business and households is that you save around more or less 70% of your the money that you pay for electricity if you set up your own net metering or solar rooftop PV system that is connected to net metering. So that's how they present it. I think it's far more higher. The savings is far more higher now. And so that's one. The second one is that they created a new policy in terms of the new rules on what they call as the Distributed Energy Resources Rules, which basically allows for LGUs, local governments, or local communities that are aggruppated to set up at least 1 megawatt of renewable energy facility. And that 30% of this is the electric cooperative is obliged to buy. Meaning they're using their police powers that, electric cooperatives or distribution utilities needs to buy at least 30% of the 1 megawatt. And then the 1 megawatt is used by the LGU, the local government. So I think these two interventions just this year, the new rule on DER was just released like 3 months ago. And I hope most of the regulatory bodies in different countries take this crisis and problem as an opportunity to advance renewable energy, to advance distributed renewable energy, right? Because it's once you push for the large scale renewable energy, it takes time, right? At least a year or 6 months at the minimum to deploy it, right? But distributed renewable energy, I think this is the opportune moment to really promote it and scale up in terms of ambition, especially partnering with local governments, because at the end of the day they're the ones that's really feeling the brunt, the at the local level, and if you are able to provide solutions for them to caution, right? Because we're left with this infrastructure that the whole power sector is dependent on, and we have to deal with it, right? But you can actually have a sort of a pathway or carving out towards a more distributed renewable energy system. So I think this is one of and I'm really glad that one of the regulatory bodies in the Philippines has finally realized that, taking advantage of the crisis as an opportunity, not just to caution the impacts, but to actually promote a more sustainable source of electricity.
And just being mindful of your time, Gerry, I've just got one more follow-up on what you were just referring to there. What do you think the implications of that distributed renewable energy system, say for the Philippines, has? What are the implications on energy poverty and in particular electrification of especially rural areas?
So it's actually that's also the other benefit. There has been a lot of investments in the power sector, public finance. And always the likes of ADB, the likes of World Bank, or bilateral agreements, always it's tied up to poverty alleviation. Always it's tied up to addressing energy poverty in the Philippines or in the region, right? Because Asia has one of the highest in terms of energy poverty, much more the issue on accessibility, right? So it's not just about like affordability, the issue on affordability, because it's relative to different countries. So renewable energy becomes now a major tool to actually really address that, right? And because for decades it has been, the model has always been fossil fuel based, centralized, a grid tied strategy in the power sector, and it has actually really failed to address 100% or full electrification and accessibility, right? It's like a whole 5 decades, and it hasn't been resolved. And I think that strategy for distributed renewable energy, which one of the regulatory bodies in the Philippines is now really moving into and quite aggressively, is to promote that. But we also need to deal and couple that with the issue on the big infrastructures, right? And I don't want to say that DRE will actually solve everything, right? It has to be a combination of different strategies. And at the end of the day, you have to deal with how do we convince the likes of San Miguel, PTT, Gulf, companies in Vietnam or somewhere else that, placing your bet on renewable energy is actually far more, good business decision, right? It's there already. And most of these companies have are starting their own renewable energy portfolios, right? I don't know if there's a company nowadays that doesn't have the energy company that doesn't have an investment or their own renewable energy portfolio, right? Most of them have. Like in the Philippines, all energy companies that are involved in fossil fuel have their own renewable energy portfolio or program. One could be, less ambitious than the other, but there's a lot of starting points there. So I think the industry needs to also wake up and reflect on what's happening. Of course, for policymakers, I think all policymakers are discussing this already, right? And unfortunately, there are drawbacks from being import dependent to you now develop your own domestic fossil fuel extraction, right? That is a very problematic proposition, but very enticing because of revenues and because of their ties to domestic corporations, right? So it's very enticing, and it's very it's one of the major challenges with what's happening as well for the likes of Southeast Asia, and in particular the Philippines. There's a lot of impetus on that. But definitely for renewable energy, I think most of the stories of communities that have gone off grid, or communities that are for the first time was able to use electricity. I think most of these stories needs to be ramped up, because this is the time wherein the basic issue on tariff, on high prices, will actually become a major debate on the ground. And we can the advocacy and the business sense on renewable energy will actually this becomes an opportune moment for the renewable energy industry as well.
Now, there's so much to talk about, Gerry, and we barely scratched the surface today, but thank you so much for your time. Before we go, would you be able to give listeners any social media following opportunities, anything to follow your work or maybe CEED's work?
So CEED has a website that's www.seedphilippines.com. We are also in Twitter, in Facebook, in LinkedIn. So you can follow us. We've released a lot of reports this year. So we come up with reports on financing, tracking fossil fuel development for the Philippines and for Southeast Asia. We also track a few multilaterals. But definitely for next year, there's plenty of reports that will be coming out. Just visit our website. It's fairly accessible, or do email us if you need any particular information.
Great. Thanks so much, Gerry, and it was an absolute pleasure to catch up and have a chat about all these really important issues.
Thanks, Ashley. It's really good to have this conversation with you. It's not every day to have, while we're just barely scratching the surface. It's not always to have a deeper conversation on these issues.
If you like this episode of Energy Insights, please don't forget to subscribe to our podcast channel, share it with your friends, and follow us on social media. For all our other content, head to energytracker.asia for more. Thanks again for listening, and we'll see you again on Energy Insights.